Hi, this is the weekly recap for the week ending Friday the 19th. And first, we have a quick look at the April trade that expired last week. We made about $400. I could have made $20 more at some point. I just wanted to keep that wild card just in case of some pullback, but that never happened. So, well, that's it. If we now look at May, May is also positioned pretty safe. Now it's almost at break even. If we look at a projection for, let's say we close around 11 DTE, it should be okay, flat delta. Of course, I wouldn't want SPX to toy with the 3,000 levels. I don't think it will go to that almighty level without a pullback or a breeze or something. On the downside, it's actually pretty safe. We could, as I mentioned, just for the sake of capital control, we can maybe simplify the trade, do another reverse Harvey like this, for instance. Actually, we could fit in this for $150. Delta will be slightly positive, which is okay after it's around 21 DTE. The charm, so basically the second derivative of delta to time tends to pick up. That's why generally your delta goes back into negative territory as the trade gets near expiration. So that's something that could be done, maybe just to keep it more balanced, add a CCS on that side. So these are minor tweaks. It's not really necessary, but why not just put in a, so if we go back, expiration, that would be about $600. And if we close a trade there, there would be about $500 as well. So fairly easygoing trade, nothing much to do. The management has been okay, mostly because the trade has finally stalled in this area between 900. And the only regret we may have is that we don't have much theta there. So, of course, theta will pick up with time, but it's a conservative trade, and the only way to really try and get more out of it would be to try and place either a narrow condor, iron condor, or even a butterfly around 2900. I mean, let's go a little bit more aggressive. If we were to put, let's say, a 29 condor around here, as you can see, we would do well. It's still it's a bit of a wild card again. I mean, because we would have a bit more negative delta that could be tuned by placing the PCS a bit higher if necessary, or pushing the CCS higher. We would have a minor potential loss. We would take some minor risk, but this is not the Rhino as such. So these are, when we talk about layers, like a 9 condor layer, of course, it is at each and everyone's discretion, but a strategy is also a concept, a risk profile, a philosophy, so to say. So any modification, amendment to the strategy must still be conformant to the overall type of strategy you're comfortable with. Otherwise, you feel uncomfortable, uneasy, uncertain, and doubt the strategy as such. Nothing much to do this week. The Giant Rhino is also looking good. Good downside cover, very little risk. The May cycle has been closed, so now we have about 3-4 weeks to close the June cycle. So this is maybe a time on a pullback to try and RH. As you can see, this trade has not produced since it was started in November on the way down. So it's seen a big fall, a crazy recovery, and in this type of market, all we can really do is make sure that each cycle breaks even. So we do carry over a loss, and the loss is basically on the last ones, because the last July Rhino type butterflies are positioned around 2800. So of course they are on negative theta territory. They are maybe some would actually RH those quicker. Not saying that there's a strict rule about doing that. It may be a more aggressive, let's say, giant, because if I was to do that, I would get probably more premium. It would be it would be more of a giant RTT than a giant Rhino. But that could be done. Right, so this trade is easygoing. And I'm not saying since I've been blending RTT type adjustments or even entries with the Rhino, I'm not saying that it's not possible to actually try and break even on the cycle without waiting for 65 days or 60 days. The reason why I haven't done that is that in this low volatility environment, the skew is exacerbated, which means that if there was to be a very sharp reversal, I would certainly not get this type of skew. It would flatten very quickly. So I would suspect that on this type of trade, if the market would drop, let's say 150 points, I would definitely not make $1,500. I would make probably, I would be happy if I make 500. These are all the intricacies of modeling, especially in low IV environments. Right, B2B May is not doing so well. Not doing so well. It's doing okay thanks to this hedge that, and thanks mostly to SPX holding on in that range. Okay, no, so not. No, it's losing money, and I don't really like the T+0 line, and it has if 29 DTE, so this trade should be closed within 2 weeks, and also within 2 weeks, it's not going to be. Yeah, it's not going to be. If the market retraces, I may mitigate the loss, maybe $500, but it's not doing great. I will have to analyze this trade carefully whether the adjustment was a bit too late, but it started very much by the book. So it may also show, like it was seen already in 2017, it may be a weakness of this trade in very low IV environment. I will have to analyze it a bit more closely. The June entry is okay, nothing to do. Flat delta. I suspect again that if the market would reverse, it may be affected by a surge in volatility. This platform doesn't calculate VOMA, the second order derivative of Vega, but it's not probably going to do well. So we have to be careful. Although if you watch the market outlook video, the chances of breaking 2860, 75 are pretty low. There's also support around 2850. So it is a fairly safe bet, but again, it all depends whether the market retraces with a vengeance or not. So the volatility behavior will be key to this T+0 line. The buy the book is about the same. It has, of course, because it's not a mix of Rhino and RTT, it has a slightly better cover on the downside. But of course, it also has a bit more risk on the upside. But overall, it's okay. Nothing to do this week probably, unless the market moves sharply. So lastly, I'm going to take a look at the Russell 0503. Yeah, this is a new one. It's doing okay. The T now, if we go for end of week, which will be T+8. It's not exactly perfect on the 1SD, but it's still okay. Delta should be flat. The ratios should still behave within that range. So hopefully not much to do. I think the one that I closed the day before, yeah, I closed it. Of course, gamma picks up, but it was a -2 or 2 gamma is still okay for a weekly trade. So closing the trade may be plus minus $50. That's always a risk to take unless you want to time closely. I didn't have much time to look at this. I'm just happy that it was close to profit target. It had very little to do with the whole week. Entered on the 12th and then basically wound down on 17 and 18. A weekly trade like we all dream of. So very, very simple profit target. Since we've had a few weeks with plus minus small profit, small loss, this trade should bring about overall 2% per week and a profit ratio of about 70-80%. So that should be a good trade. Of course, it's a bit more time consuming, but it's a good trade to have a portfolio of strategies. I'm going to stop right here. As you may hear from my voice, I'm not feeling great. So I'll see you a bit later on Slack. Bye for now.